Hello and welcome to the World Battery Metals and Mining News for the 17th of July 2024. China copper smelters plan to cut output after margins fall. Two major Chinese copper smelters, Day Non-Ferrous Metals Group and Baotou Huading Copper Industry, plan to reduce smelting production next year due to an oversupply of capacity relative to mine output, negatively impacting processing margins. At a recent smelters meeting in Shanghai, both firms highlighted ongoing and planned production cuts amid feedstock shortages, with Day targeting a 20% reduction and Baotou Huading planning a 40% cut. The industry faces challenges from reduced mine production and overcapacity, which have driven copper futures to record highs. Though there are uncertainties about the overall impact on refined copper output, increasing byproduct revenues have somewhat offset losses. However, processing fees, or treatment charges, have dropped sharply, indicating tighter profit margins. Copper price edges down to two-week low amid demand uncertainty. Copper prices fell to a two-week low amid fluctuating trading conditions, influenced by uncertainties surrounding supply and demand in China and a general weakness in equity markets. This marks the third consecutive daily decline for the metal, which had earlier seen gains due to a weakening dollar and potential production cuts by Chinese smelters. Prices remained relatively steady in recent weeks, following a retreat from May's record highs driven by energy transition expectations. Concerns over China's slowing economic growth and potential economic stimuli discussions at the third plenum also played a role. Copper prices dipped by 0.4% to 9,623.50 per ton on the London Metal Exchange, with most metals showing minor declines, while lead saw an increase due to a significant drop in readily available inventories. Arizona Sonoran expands Cactus Copper resource, new PEA pending. Arizona Sonoran has significantly increased its measured and indicated resource tonnage for the Cactus Copper project in Arizona by 26%, following a 7-month drilling program, bringing total measured and indicated resources to 632.6 million tons at 0.58% copper. Inferred resources also saw a substantial increase of 60%, now totaling 474 million tons at 0.41% copper. The drilling program confirmed the Park Salyer resource area and the new Mainspring property as a single deposit, with the overall resource containing 4.8 billion pounds of measured and indicated copper and 2.6 billion pounds of inferred copper. The company's CEO, George Ogilvie, highlighted the transformative potential of the Park Salyer deposit, which could lead to a larger open pit operation and improved project economics. Arizona Sonoran plans to incorporate the expanded deposit into a new preliminary economic assessment (PEA) this summer, aiming for a definitive feasibility study by the end of next year. Meanwhile, no material changes were reported for the other segments of the project. The recently completed pre-feasibility study estimates a 21-year operation producing 110 million pounds of copper annually, with an after-tax net present value of $515 million. Antofagasta expects 2024 copper output at low end of yearly forecast. Chilean miner Antofagasta anticipates full-year copper production to be at the lower end of its projected range of 670,000 to 710,000 metric tons due to lower ore grades. The company reported net cash costs of 1.94 cents per pound for the first half of the year, representing an 11% increase from the same period in 2023. Copper production for the first half was 284,700 metric tons, a decline of 3.7% from the previous year, driven by lower grades at its main mines, Los Pelambres and Centinela. Despite these challenges, Antofagasta maintained its capital expenditure guidance at $2.7 billion for the year. Copper, essential in the power and construction sectors, is expected to see rising demand from the green energy transition, particularly in electric vehicles and new applications like data centers for artificial intelligence. Rio Tinto names Shell's Katie Jackson as new copper chief. Mining giant Rio Tinto has appointed former Shell executive Katie Jackson as the new head of its copper division, starting on September 1st. Jackson, currently president of National Grid Ventures, will replace Bold Bhattar, who will transition to the role of chief commercial officer later this year. Jackson brings extensive international experience in the energy sector, having held significant roles at Shell and BG Group. Rio Tinto CEO Jakob Stausholm highlighted Jackson's appointment as critical for the future of the company's copper business, especially as they ramp up operations at the Oyu Tolgoi mine. Jackson expressed enthusiasm about leading Rio's copper division during a pivotal time for the metal's role in the transition to a low-carbon future. Batar's move is seen by some analysts as positioning him as a potential successor to Stausholm, although other internal candidates also exist for the top role. Sodium-ion battery startup sparks lithium alternative. Peak Energy, a startup specializing in energy storage, has secured $55 million in Series A funding to expand its production of sodium-ion batteries as an alternative to lithium-ion technology. The funding, led by Zora Innovation with contributions from existing investors, will also support the construction of a new U.S. factory aimed to open in 2026. Sodium-ion batteries, which utilize readily available and cheaper materials like natural rock salts, have a longer lifespan and are less prone to fire hazards compared to lithium-ion batteries. Despite their lower energy density, making them less suitable for electric vehicles, they are viewed as a cost-effective solution for large-scale and long-duration grid storage. Peak Energy's leadership comprises veterans from companies like Tesla and Northvolt AB, and they plan to address the growing demand for extended grid storage durations with their advanced battery technology. Ramp Metals stock surges on Sprott backing for Saskatchewan project. Shares of Ramp Metals surged over 28% on Wednesday, following a significant investment by gold enthusiast Eric Sprott, who led a $4.5 million stock offering. The Saskatchewan-based Explorer stock is now valued at C83, reflecting a meteoric rise of nearly 340% since its March listing. The investment hinges on recent drilling results from Ramp's Rottenstone SW project, which yielded promising gold and silver findings. The company plans to issue roughly 6.5 million shares through Canada's charity flow-through regime to raise about $4.5 million. Ramp CEO Jordan Black highlighted the potential of the project, which is on the same mineral-rich trend as the historic Rottenstone mine. Despite some mixed drilling results, the market enthusiasm remains high. Ramp's project is gaining attention as it diverges from the uranium-focused exploration common in northern Saskatchewan, targeting valuable metals instead. Column: BHP joins the lengthening list of nickel price casualties. Indonesia's surge in nickel production is significantly impacting global markets, causing a steep price decline and challenging the West's efforts to diversify its critical metals supply chains. The price drop has forced major players like BHP Group to suspend operations in Western Australia and has led to financial struggles for other Australian companies like Panoramic Resources and IGO Limited. Investment funds have also turned bearish, and the London Metal Exchange, LME, reports increasing inflows of nickel, largely from Chinese and Indonesian sources. Indonesia's dominance in nickel production, driven by Chinese investments, could rise to 75% of global output by 2028, raising concerns about concentration and environmental impact. Efforts to diversify supply chains, such as the United States' potential engagement with Indonesia through the Mineral Security Partnership, MSP, aim to address these challenges while improving environmental standards. Global battery demand to quadruple by 2030, report. Global battery demand is projected to quadruple to 4,100 gigawatt-hours GWHs by 2030, driven primarily by the dominant lithium-ion technology, particularly nickel manganese cobalt NMC and lithium iron phosphate LFP chemistries. A report by Bain & Company highlights that LFP will become more prevalent in China due to strong EV demand and robust supply chains, while in the USA and EU, its market share will lag due to nascent domestic production and supply constraints. Emerging technologies like solid-state and sodium-ion batteries are still in early stages and are expected to hold a minimal market share until 2030. Bain emphasizes the critical decisions OEMs face in battery selection and development, influenced by ongoing changes in battery chemistries and supply chain considerations. Drug Disneyland, part of lax safety culture in shadow of Victoria Gold accident, workers say. A landslide at Victoria Gold's Eagle Mine in the Yukon has halted production, highlighting alleged concerns about the company's safety protocols. Current and former employees revealed incidents of neglected repairs, subverted injury reports, and tolerated drug and alcohol use at the supposedly dry camp. The former staff noted ongoing safety complaints which were ignored, hampering corrective actions. Following the June 24 spill and landslide, Victoria faces $132.5 million in debt and no cash flow, resulting in an 85% drop in its share price. The Yukon government confirmed this as the second landslide at Eagle this year, pointing to a recurring issue. Victoria Gold has not commented on these accusations, while investigations into the cause of the latest incident continue. Heliostar Metals stock gains on Mexican asset buys. Heliostar Metals is acquiring assets from former Argonaut Gold to expand its operations in Mexico. The Vancouver-based company is negotiating a loan to fund the $5 million purchase, which includes the San Agustin and La Colorada mines, as well as the San Antonio and Cerro del Gallo projects. The acquisition also nullifies $20 million in payments linked to a previous deal and $150 million in potential contingency payments. The deal transitions Heliostar from a single asset developer to a multi-asset producer, boosting its gold production capacity. Shares of Heliostar rose 8% following the announcement. The company, aiming to produce over 500,000 of gold a year by 2030, will continue focusing on developing the Ana Paula project with significant measured and indicated gold resources. The transaction is set to close in October. Gold price sets new high as traders bet on Fed rate pivot. Gold prices experienced a volatile day on Wednesday, initially hitting a record high of $2,183.73 an ounce before retreating to $2,455.71 an ounce by mid-afternoon. This comes as traders anticipate Federal Reserve rate cuts amid signs of cooling inflation in the U.S. Comments from Fed Governor Christopher Waller suggest the central bank is nearing a point where it can reduce borrowing costs, although more evidence of sustained lower inflation is needed. Gold's strong performance this year, up nearly 20%, is driven by central bank purchases, strong consumer demand in China, and geopolitical uncertainties. Some experts, like Chris Weston from Pepperstone Group Ltd., believe that gold prices might soon test the $2,500 mark, although indicators suggest the current rally could be overextended. G2 Goldfields to raise $31 million for Oko project in Guyana. G2 Goldfields has initiated a $42 million non-brokered private placement to advance exploration at its Oko Gold project in Guyana, selling approximately 29 million shares at $145 each. The offer is set to close on August 4th, subject to regulatory approval, with AngloGold Ashanti and a European investor participating significantly. This will raise AngloGold's stake in G2 to about 15%. With the raised funds, G2 expects to expedite its exploration in the Oko Aremu district, which includes significant resources in both the Oko Main and Gani zones. The company is also focusing on multiple other zones within the district and anticipates an updated resource estimate later this year. Iron ore price slumps to three-week low on weak China demand, strong global supply. Iron ore futures prices fell to a nearly three-week low, driven by weak seasonal demand from China and increasing global supply. On Wednesday, the most traded September iron ore contract on China's Dalian Commodity Exchange ended almost 2.7% lower at 805 yuan per metric ton, while the benchmark August iron ore on the Singapore Exchange was down 2.34% to $104.85 a ton. The slump is attributed to reduced property investment and home sales in China, compounded by extreme weather conditions. Meanwhile, global production has risen, with China's June crude iron ore output growing 9.9% year-on-year, BHP Group reporting record annual production, and Brazilian miner Vale SA optimistic about hitting high-end production goals. Other steelmaking ingredients and steel benchmarks also saw declines in prices. Fortescue cuts 700 jobs, slows down green hydrogen plans. Fortescue ASFMG is set to cut approximately 700 jobs, about 4.5% of its global workforce, as it scales back its ambitious plans to transition to a green hydrogen leader. The restructuring aims to keep the Australian iron ore miner lean, impactful, and agile while maintaining financial stability under new permanent CFO Apple Paget. Despite founder Andrew Forrest's commitment to green technology, production goals for green hydrogen have been delayed due to high energy prices exacerbated by the Ukraine and Middle East conflicts. This move adds to significant job losses in Australia's resources sector and represents a shift in Fortescue's investment strategy, focusing on measured growth in green energy initiatives. Freeport, Indonesia, to process 400,000 ton of copper concentrate at new smelter. Freeport, Indonesia, has announced that its new $3.7 billion smelter in Gresik, East Java, will process approximately 400,000 metric tons of copper concentrate from August to December, with the aim of reaching full capacity by the end of the year. The smelter, launched last month, has a production capacity of 1.7 million metric tons of copper concentrate, yielding around 650,000 tons of copper cathode and 50 to 60 tons of gold annually. Once fully operational, it will enable Freeport, Indonesia, to domestically process all of its 3 million tons of annual copper concentrate output. The smelter's ramp-up comes as Freeport, Indonesia, received an export permit for excess copper concentrate while construction continues. As part of Indonesia's ban on raw mineral exports initiated in June 2023, Freeport Indonesia and Aman Mineral International received exemptions until May 31, 2024, to complete their smelters.